Hello and welcome to Beat the Street, the show that gives you all the tradable news and data ahead of the Wall Street Open. Well, we've got quite a few things to cover today, but coming up on the show, McDonald's gets the earnings report started this week with its quarterly update, and Apple will follow later in the week. Dollar direction. Well, a rate decision from the US Federal Reserve dominates the calendar this week. We'll also be looking at what the markets are expecting that could move the US dollar as noted, and that will come ahead of Friday's all-important US non-farm payrolls as well. And Stellantis and Ford have struck a tentative pay deal with the United Auto Workers Union, ending a 6-week strike. Well, good afternoon. I'm Angela Barnes and you are watching Beat the Street. Well, it's not long now before Wall Street starts trading. So let's just take a look at how equity markets are looking so far. Okay, well, we've got the S&P 500, US 500 poised at 0.6 up 0.6%. The US Tech 100, the Nasdaq also up marginally 0.7%. And as well, the Dow Jones Industrial Average, Wall Street 0.5% higher as well. So all three major US indexes set for a higher open this afternoon ahead of a busy week with monetary policy decisions, employment data and more earnings. As noted there, well, a surge in Treasury yields and ongoing geopolitical uncertainty has certainly pressured stocks, with the S&P down 3.5% for the month of October roughly. Disappointing tech results last week also added pressure to stocks as well. So investors now will be watching Apple results closely this week. More on that shortly. But first, let's start with McDonald's earnings. And let's just pull out the price chart for McDonald's. Well, the food chain has reported results for the third quarter ended 30th September 2023. Revenues increased 14% to $6.7 billion compared to the same period a year ago. Comparable sales increased 8.8%. Net income grew 17% to $2.32 billion, while EPS earnings per share rose 18% to $3.17 versus last year, while adjusted EPS increased 19% to $3.19. The company also declared a 10% increase in its quarterly cash dividend to $1.67 per share. Well, let's just have a look at the McDonald's price share chart. It's an all-session stock on the IG platform, and its share price is up 2.64% as it stands. So the news clearly cheering investors. Year to date, its stock, though, is only up marginally, nearly 1%, after falling from the highs seen here in May, June and July. Well, let's move on now to other earnings to watch out for this week. Well, on Tuesday, we also have results from AMD, Pfizer and Caterpillar. And then on Wednesday, we'll hear from Kraft Heinz, Abbott, Budget. And Thursday, as noted earlier, Apple will be the big one to watch, Coinbase as well, and Moderna and more. But let's just turn back to Apple now, because their earnings will be on Thursday, very closely watched after the S&P 500 last week fell into correction territory. Investors will look to not only that Fed rate decision Wednesday, but Apple, the biggest company in the index, to steady things during what's been a challenging few months for investors. Well, Apple is expected to report earnings per share of $1.39. That's 20 cents higher than the last quarter's estimate, which Apple beat by 5.49% after reporting earnings per share of $1.26. Meanwhile, revenue is estimated to come in at $89.31 billion compared to the previous quarter's estimate of $81.80, which Apple met. Well, if we have a quick look at Apple's share price, again, it is, let me pull up the price chart. Here we are. Again, it's an all-session stock on the IG platform, and its share price is up 0.545% today and has gained about 29% since the start of this year. Meanwhile, in other news, Chrysler maker Stellantis has struck a tentative pay deal with the United Auto Workers Union to end a 6-week strike. While the agreement still needs to be approved by union leaders and members, it follows a similar deal that was struck with Ford last week. but the UAW began strikes against GM, Ford and Stellantis in September. So this has drawn on. It has yet to reach a deal with GM and is expanding action against the firm. Well, the agreement between the UAW and Stellantis will see wages for most workers rise by 25% over the next 4.5 years. But the big news of this week, moving on, is, of course, the Federal Reserve rate decision, and that is happening on Wednesday, which could prompt some dollar moves. The Bank of England and Bank of Japan have also monetary policy meetings this week, which investors are, of course, also keeping across. The US Federal Reserve is expected to keep rates at 5.5%. Investors will also be looking for guidance on where the Fed will go from there, because, of course, interest rates, they want to know whether the central bank is going to be done with its hiking cycle. Uncertainty around that has grown since its last meeting in September, when policymakers suggested that one more rate hike this year was likely. However, Treasury yields have spiked since then, which has prompted several Fed officials to say rates don't need to go any higher. Well, September's personal consumption expenditure index, if we look at it's a key inflation measure. Well, that was in line with expectations last week. Then this week, we're going to have more data, several key employment reports expected, and including, of course, US non-farm payrolls on Friday for October. But that, of course, will come after the Federal Reserve's rate decision on Wednesday. But on that note, US non-farm payrolls, well, 172,000 jobs, are expected to be created in October, down from 336,000 in September. Meanwhile, the unemployment rate is expected to remain at 3.8%. So what does all this mean for the US dollar, and what are the trading opportunities? Well, we're going to bring in one of our analysts in a moment, but let me just pull up the dollar basket to have a look at how it's doing against other currencies today. Let's look at the US dollar price chart. Well, marginally down, pretty flat it's been this morning, but down 0.11% at the moment. But let's get more on the dollar action from Chris at Tasty Live, joining us from New York. Chris, great to see you there. Thanks very much for joining us. So it's a huge week, of course. Federal Reserve rate decision on Wednesday. We've got US non-farm payrolls on Friday. What are you expecting from the US dollar, and what are those trading opportunities?
Well, first off, the dollar's had a fairly decent month. It's up by about 0.24% thus far. And that actually may not seem like a good performance in light of the fact that U.S. Treasury yields have risen across the curve. I would implore people to focus on what's happening with the 2-year yield, which more readily reflects those Federal Reserve rate hike odds, which more or less have leveled off here through the end of this year. I think that's the key point. You mentioned this a moment ago, but Fed officials have said repeatedly prior to the communications blackout window that the commensurate rise in U.S. Treasury yields, particularly at the long end of the curve, did enough of the heavy lifting for them such that they may not need to raise rates again. And sure enough, markets are no longer pricing in any more rate hikes in the foreseeable future. There's less than a 35% chance of a hike in December. There's less of a 35% chance of a hike in January. There's a 1% chance of a hike this week. And so it really depends on how long we stay at these levels if the dollar is going to have this Federal Reserve induced tailwind at its back. Otherwise, what they say around the labor market actually could prove to be the catalyst that jolts non-farm payrolls into a higher echelon of importance here. Typically, when non-farm payrolls comes after a Fed meeting, it loses a little bit of its teeth. But if the Fed says we could go ahead and do another rate hike, depending upon the state of the labor market, all eyes then turn to that Friday jobs report. Otherwise, in this world where there is a shift to safety, where there is a demand for liquid assets right now as geopolitical risks rise and stay elevated for what appears to be the foreseeable future, the dollar remains well-footed to at least hold on to its gains, though finding more gains beyond here could be difficult if those short-end U.S. Treasury yields do not continue to rise.
Brilliant. Well, Chris, thank you ever so much for sharing your insight with us and for joining us on Beat the Street. Okay, well, that was Chris there from Tasty Live. But let's just have a quick look, talking about the shift to safety. We're going to touch on gold in a moment, but let's just have a look at how oil prices are doing. Let's pull up, first of all, the Brent price chart. So if we just take a look at how Brent is performing, because oil has continued to be dominated by the twin forces of concerns that supplies are not enough to fulfill demand. but that demand has the potential to weaken as growth subsides. Well, today, Brent crude is down 1.61%. And then if we move over as well to US crude, otherwise known as WTI, that too is down 1.87%, trading around $83 a barrel. And Brent was at $87 a barrel. So off that $90 barrel mark that it's been trading at recently. And this comes off the back of the Baker Hughes rig count. Well, the US weekly oil rig count rose last week by a net margin of 1, adding rigs for a third week in a row to 625, while US oil rigs rose by 2 to 504, while gas rigs fell by 1 to 117. Now let's move on to gold and have a look at how that's performing today, because it was back up over 2,000 last week. Although you can see it's fallen today, it's down 0.51%. It's at around 1990. And that's investors have turned to the safe haven asset of late amid the geopolitical concerns in the Middle East. But the precious metal did hit a fresh 5-month high on Friday. And the ongoing safe haven bid is expected to continue, however, with a retest of resistance around 2009 per ounce. The analysts at IG believe is possible in the coming days. So we'll be keeping across gold as well. Well, that's all we've got time for today on Beat the Street. Thank you very much for watching, and do stay tuned across all our IG platforms for more market updates and analysis. Thanks very much for watching. I'm Angela Barnes.